Thanks everyone. Thanks for your time tonight. I appreciate everybody coming out and making the effort. What I'm hoping to do tonight is just explain a little bit of the business model of Avation, then spend 5 minutes on going through the results that the company released just over 2 weeks ago on the 16th of February. Those are half-year 2017 financial year results. And then finish off with a little bit of discussion on a transaction that we noted in our announcements in November, where we've been bid for some assets of our company, and then finish off obviously with the Q&A. Avation's a commercial passenger aircraft lessor, and so what that means is that we own commercial passenger aircraft and we lease them to the airlines. It's a very simple business model that we have. We like to buy brand new or very young planes, and we like to lease them for the long term to the airlines. And the metrics of the business are such that a plane will actually pay itself off within, say, 10 to 12 years of us buying it. And so the analogy for those of you who have never heard of this business is that owning a plane is, and I've said this before if you've attended one of these things, is that the analogy is that it's a lot like owning a flat to let. So you go and find the flat that you think is the most attractive and it'll generate the most rent and will rent for the longest term. And we are very particular in the types of aircraft that we choose. We then find we typically use bank debt to buy that aircraft. And then we find an airline who's our tenant, in fact. And we sign a very long lease with them. And that's how effectively it works. The analogy breaks down slightly differently in these terms. The typical lease that we'll sign for an aircraft is 10 to 12 years. You know, you might sign a 1 or 2 year lease on a property. We sign 10 to 12 year fixed rate leases on aircraft. So that gives us a lot of security and visibility of the income stream that the asset's going to generate. And the other key number, obviously, is what the yield that asset produces. Those of you who do have property investments will know that property investments can generate 1, 2, 3% yield. Typically, an aircraft will generate 12%, upward, around, on average, 12% a year for its life. So if you think about it in very simple terms of the analogy, if you lease a plane for 10 years, at 12%, you get back 120% of what you paid for it. And it is as simple as that. And that's more than enough to pay off all the debt that you use to buy that aircraft, which is typically 75 to 80% debt, so very similar to property type LTVs. And then you own that plane freehold at the end of that first lease period. And typically in most cases, airlines, given that airlines are continually growing because passenger growth is continually growing, the airlines will sign lease extensions, and airlines live for about 25 years. And so after that first 10, 11 years sort of period, you're generally getting sort of free cash flow sort of after that. So the plane's more than enough to pay itself off and then generate lots of profitability and free cash flow, which you can then use to remortgage that plane and help buy other planes. So we've been a company that's been around now for 10 years. And we've grown from a couple of planes to 40 aircraft that we currently hold. And our sort of capacity and our opportunity, our results have never been better. And as a consequence, the sort of shares are trading around an all-time high. But alongside of that, every 6 months, as you'll see in the results that we go through in a moment, we're generating very sort of the record results every time we sort of present a set of results. So we're a Singapore-based company. We're listed on the London Stock Exchange. It's not a name company. It's listed on the London Stock Exchange, standard listing. And everything that we do is in US dollars. So we buy planes in US dollars. We borrow money in US dollars. We set rents in US dollars. So we don't have any exposure typically to currency fluctuations. We own 40 narrow-body aircraft. For those of you who don't know, narrow-body aircraft are the most popular planes in the world. That's planes that have an aisle down the middle, seats on either side. There are three particular types of aircraft that we focus on, and it's easiest to give you the description by talking about the airlines who use them. The first is Boeing 737, which is used by Ryanair. The second is the Airbus A320, which is used by EasyJet. And the third is that aircraft on the front cover, which is an ATR 72. It's a turboprop, short-haul regional aircraft. So it's an aircraft that's used to fly. You might fly to Dublin, out of London City Airport, things like that. And 30% of all aircraft journeys around the world are short-haul. That's 500 nautical miles or less. And that's the plane of choice that airlines use. That's used in over 100 countries by 200 different airlines of the world. And what I'm telling you about, those narrow-body aircraft, those three that I just mentioned, represent over 75% of all aircraft on the planet. And so why are we focusing on those? Because we own a portfolio of assets that generate very strong yields, pay themselves off, that eventually all have to be sold. And so we like the most liquid of assets. And so it's not unlike your decision when you're investing in shares. You want shares not only that you can buy, but when you need to sell them, have enough liquidity for you when you do sell them as well. And that protects us from a residual value risk because we are actual owners of the assets. So we've got 40 of those aircraft, and as I'll show you in just a moment, our balance sheet's approaching almost $1 billion in assets. We have about an equal weighting of jets and the turboprops. Our market focus is on Asia Pacific and Europe. Asia Pacific obviously is the leading growth market in aviation and airlines. And we've got lots of opportunities for future aircraft. We've got 38 options of the turboprop aircraft, which we can almost double our fleet numbers in. So we've got lots of growth. And to put it in context, over 10 years, on average, this company doubles in size every 2 years. And in fact, in the last 18 months to 31 December, the company more than doubled in 18 months. And the share price has responded accordingly. A year ago, the share price was about £1.25. It's about £2.20 something today. So the results reflect the growth in our assets and reflect the growth in our earnings. And our growth has been almost continuous for 10 years. These are results. So after introducing the business model and the company to you, these are the results we released less than 2 weeks ago. So they're a very fresh set of numbers, and I won't spend too much time on them. The numbers speak for themselves. There is a brochure that will be outside in the drinks room that does summarise these numbers, and you'll get the presentation tomorrow, as was suggested. So year-on-year results for the half year. Revenue's up 43%, operating profit up 54%, total profit, the bottom line's up 54%. Year on year. Earnings per share is up 46% year on year. Cash flow's up 65%, and total assets approaching $970 million US, which is up 53% year on year. As I said, that's quite a strong set of numbers. And the share price has responded since we released these numbers that are all 50% higher by going up about 10%. So we think the company is fundamentally undervalued. Which is why we're taking the time. I live in Singapore to come out and explain to our investors and stockbrokers and potentially new investors, the history of this company, what it's built in terms of its business model and where it's going to. And in the simple case is we're not changing anything about what the business is doing for in the last 10 years. In the future, we're just going to continue to acquire aircraft and grow on from here. The good news is in terms of our opportunities that there are 1,600 aircraft manufactured every year, and of those 1,200 of them are narrow bodies. So we typically look to add, we added around about nine aircraft in the last sort of calendar year. So we're looking at around about one a month, and that's so 10 to 15 per year of the 1,200 aircraft. That's how big our opportunity is. So this company can continue to keep doubling in size. So highlights, in the last 6 months, we added 5 brand new $50 million A321 aircraft. We sold 5 of the oldest aircraft in the fleet because to de-risk our business, the key metrics that you look at are how old the planes are, how old the average age of the 40 planes, and the average lease term attached to those 40 planes. That's how you de-risk these assets. And if you look at the fleet metrics, the average age of the fleet has decreased to 2.8 years. So we have 40 planes that are less than 3 years old on average. And those 40 planes have 7.8 years to run on their leases. And this is how you protect yourself from down cycles. And that the airlines now have the responsibility to pay to us. And our revenue run rate at 31 December is about $100 million a year. So we'll earn, in 7.8 years, we'll earn $780 million, which the majority of which we'll use just to pay down those aircraft and own those 40 aircraft outright towards the end of that period. That's the business model. And we started off, when we did the first plane, we started off with that business model. And now that we're on our 40th plane, nothing's changed. We're just becoming bigger, we're becoming more diversified, we're getting more scale. So the company's actually has huge opportunity to improve its profits moving forward. Profits generate EPS, which drives share price. We made some big funding steps, and even in December just gone, S&P improved our credit rating to a B+ from a B. So some guide on profitability. Operating profit margin grew 4% to 61%. Profit before tax grew 51%. This scale is being achieved in the business in that our administrative, we only have a couple of big expenses. Obviously, the interest expense on the money that we borrow to buy the plane is the biggest number. And then the admin expense is the only other cash outflow. And then the third one is depreciation, which is non-cash. So on an admin perspective, our admin's been flat for 2.5 years because we only employ about 18 or 19 people. And we have for the last couple of years. And people who have heard me give this speech before know that our numbers have only grown by 1 or 2 people per year. And that's because we effectively have become, like a sausage factory. We find a plane, we finance it, we lease it out, we buy it, and we put it over there. And then all we do to check our operational risk is make sure that that airline has paid the rent every month. So operationally, we need to check for 40 big direct debits into our bank account, and we know that all the rent's up to date. Because we don't do any of the maintenance on the planes. The airlines do that. We don't insure the planes. We don't do fuel, we don't do pilots, we don't do anything else. We just collect 40 rent checks a month. It's a very simple business. You don't need a lot of people to do it. You just need to know how to buy, how to lease them out, how to write the contracts. And so that's why a small admin function has been able to double the size of the business again. And so administrative expense as a function of lease revenue has dropped from just under 12% a year ago to 8.7%. And it can go down lower as we continue to build the business. Cost of debt is pretty flat for the year. And in terms of the airline industry, most people know at the moment probably the best sort of industry rumour about how well the airlines are doing is that Warren Buffett invested $12 billion into the American Airlines in recent times. But everybody will know anecdotally yourselves that the airlines are full. They've got at high capacity. They're all making profits. They're not only benefiting from the low cost of fuel, but I think they're benefiting even more from technology in that you can buy a ticket on your phone, and people are buying tickets on their phone. They're they understand their markets a lot better than they did, and they're not just running planes that are half empty anymore. In the last sort of 10 years, airline load factors, which is just bums on seats, so we've got quite a high load factor tonight. I'd say it's a 90% load factor in the room. There's only 5 or 6 spare seats, right? Airline load factors have gone from below 70% to above 80%. And even British Airways, the most well-known and often derided airline in terms of 10 years ago, it used to fly, one in every 3 seats it flew was empty. It's now over 80% bums on seats. So you imagine what an improvement in efficiency and profitability that is. And you get leading examples like Ryanair that fly 96% full. So airlines, the great thing about that, they're at full capacity, is that when they fly new routes, they've got to buy new planes. And most people, what they don't understand about this business is that every second plane in the world is owned by a leasing company like us. It's a staggering number. Just because it's got British Airways painted on the tail doesn't mean that British Airways owns it. Every second aircraft that's manufactured today will be bought by a lessor. running pretty much the same business model that we're running. And so they're doing well. And on an average, they'll produce about 2,000 planes a year for the next 20 years. And it's a very efficient business, very effective business. It's done extremely well over sort of 40 years. And it's primarily because it's run by an effective duopoly of Boeing and Airbus. They represent 95% of all planes manufactured. So it's not an industry that's open to enormous competition where people are just throwing planes into the market. They are very considered large businesses. And they want lessors to succeed because we're responsible for buying half of their merchandise. So the industry that works, and there's only a couple of hundred airlines. So the industry is actually run by a small number of individuals, but it's a very, very large business. And airlines are getting record profitability at the moment. So our simple business objectives are to have very strong fleet metrics. And those fleet metrics that I mentioned to you, 2.8 years and 7.8 years remaining on the leases, would be the best in the world. And I would encourage you to look at our peers. We're really the only listed lessor in the UK. But if you look at the listed lessors in the US, and I can give you their ticker symbols if you like, AL, AER, AYR are a couple of examples of those. Look up their fleets. They're typically 5 or 6 years old on average. So we have strong fleet metrics. We're looking to add number of airlines that we lease to diversify our revenue sources. We're looking for scale and growth, and you can see that we're achieving scale as the admin expense as a function of lease revenue comes down. So we're succeeding in that, and we've got plenty of opportunity because every new aircraft that we add to the fleet will lower that ratio even further. And we've shown multi-year control of costs in terms of our key costs of interest expense and the admin expense. So we do a lot of things that try to avoid risk. We focus on those narrow-body aircraft. We don't do the big planes. We focus on our markets. We also focus on mitigating currency risk, interest rate risk as well. Interest rates are going up. 96% of all of our debt is at fixed interest rates. And all of our lease rates are at fixed interest rates. So it doesn't matter how much. So what we do is we've got to set each plane to be profitable. And then, again, we can put it aside and just look at collecting the rent for the sort of 10 or 12-year period that it may run for. So it's a business that has a lot of risk mitigation built into it. And we've been doing it for 10 years. Moving along, that's our fleet. The transaction that I'm going to discuss with you in the last couple of minutes is that we had an offer for 22 of these 24 planes, which we announced in November. The 9 and the 27 represent our future orders that represent future growth for the company. That's the growth, which is sort of one of the key slides and slide that I like. It's shown that the company has grown, in 5.5 years, has grown by a factor of 7. So this number here is 136 million, and this number is approaching $1 billion. That's extreme, consistent growth. So I hope it demonstrates that the company sort of has a track record in doing what it's been doing. And they're the fleet metrics going down. So I won't talk about the P&L. You'll see that tomorrow. Those numbers speak for themselves, as I indicated in the summary. And there's our list of customers. So just a bit about the transaction that we mentioned. We received an unsolicited bid for these planes, which represent almost half the planes in our fleet. What we said to the market is that we wouldn't be interested in we're long-term holders and owners of assets. We want to accumulate aircraft, not sell them. If someone's willing to pay crazy money, then we might sell some aircraft. But that's certainly not our intention. And what we've said is that we wouldn't sell those aircraft unless we could get a price that's above the book value of the aircraft. Currently, this company is trading at a significant discount to the book value of its assets. So what does that mean? If we can sell our planes at higher than the book value of the assets, which is currently at 31 December, £2.52. So it's in the presentation. We actually state that at 31 December, the book value per share was $3.10. At that point in time, at the exchange rate, was £2.52. The shares are currently trading at £2.20 something. But if we can sell some of our assets at above an equivalent of £2.52 per share, it sends investors a very strong buying signal and the valuation for the company. Because one of the things that we have consistently done in our company is traded at a discount to the book value of the assets. And we don't see why there should be any reason for that. We're very high growth, we're trading at a very low PE as well. So we keep producing very strong results and we're still trading at a slight discount. So what you'll see from us as a conclusion for the transaction, if we do sell some aircraft, it justifies a buying signal, I think, that is at a premium to the book value of the shares in the company, which is currently at a discount. So the reason why I'm actually here tonight is that we think the company is undervalued. The shares are trading at £2.20 and we think that we've got a bid already at above an equivalent for that portion of the portfolio at above book value per share. So we think that sends out a very strong buying signal for the stock. That's about all I have to say. We just released strong financial results. We got a very good track record of growth, leading fleet metrics in terms of compared to any of the other lessors around the world, cost control and improved profits, a management team that's been around for 10 years doing this, and we've got lots of access to additional aircraft. We effectively can add an aircraft a month to our fleet, which is effectively what we've been doing over the past sort of 18 months. So I'll finish there and open up for questions.
Richard, thank you. Do you have any questions, please? Straight away at the back.
Yes, many congratulations on being so successful. Very impressive
Thank
to
you.
me. Why do you need us if you're successful? It can't be just to push up the share price. There has to be other reasons that you're here today.
Look, one of the things that I neglected to mention about this company is that the board and management of this company are fully invested and fully aligned with shareholders. We actually own about 25% of the company. The founder is the second largest shareholder. I'm a major shareholder. All the employees typically own shares in the company. And so, we want a very strong share price and a share price reflective of the business that we do. The companies that I mentioned, those ticker symbols, AER, AER, AL and AYR, typically trade at forward PEs of 9 and 10. We're trading at a PE of 6. They typically trade at book value per share or better, and we're trading effectively at least at a 10% discount to that today. And so, to grow our business, we need to buy more planes. To buy more planes, we're happy to use 75 to 80% debt, but we need equity, and we generate a lot of equity internally, but we want further opportunities to grow. We want to double this company and double it again. Now, to do that, we will need to raise money. But we're only prepared to raise money when, and you can see this in our last sort of 5 year of history, that we barely raised any money at all. We want to build a relationship with shareholders that suggests that, if we raise $10 million, well, that's enough to go and buy a $50 million plane. And that plane will be earnings accretive. It'll be revenue accretive, profit accretive, earnings per share accretive. So people should want to invest in the company at these sorts of valuations and actually support capital raising. So we think that the message hasn't actually reached all the investors in the UK because we trade it at such a discount. So we think that a lot of that is because there aren't a lot of lessors in the UK, so investors aren't aware of it. I know that when I mentioned that statistic to people, did you know that every second plane is leased? Jaws hit the floor. People are stunned by the fact that British Airways doesn't own all its planes. But it's a very, very large business that people don't know enough about. And so I continue to come here a couple of times a year, present our results, and try to encourage people to think seriously and do that. Go away, do their homework, look at our peers, look at our results, look at their valuations, and understand that eventually this company cannot continue to be industry undervalued. Either the market will wake up and we'll trade at equivalent valuations of our peers, or we'll get bought out by one of the bigger companies, and that's not our exit strategy. We want to keep growing the company. Or we'll do something like sell some assets at above book value that sends investors a very strong signal that these liquid assets could all be liquidated and more money returned to the shareholders than what you bought a share for. And that means it's a solid investment. So we want people to feel comfortable investing in this company, not only for its future growth potential, but right now in terms of its valuation. That's why we need you. We want to double and double again, and that means having equity investors that want to come along for the ride.
Question at the front here, please.
In relation to the resale you mentioned, how does it actually, I can't actually get my head around this, because you're saying that you're getting above the book value. It's like the second-hand car, you're getting above the market prices. So...
No, book value. Book value is not market price. Market price is what we sell it for. Book value is just the cost of the plane depreciated. So
Okay.
these planes, the planes are on average, which I just said to you, are about 3 years old, have been depreciated for 3 years, about 3.5% a year. So they've got a depreciated book value.
Oh, right.
And so you buy, that plane at the front of that plane on the front cover of that turboprop, it's about a $20 million aircraft. And the jets are about $50 million, per plane. If you buy one of those, depreciate that for 3 years, you're looking at about, $18, $17 million sort of valuation. If someone's willing to pay you $18 million for that plane, that's what we're talking about.
In terms of rationale, you mentioned British Airways. Why is it that they're not actually buying these things wholesale and having the market for themselves rather than having people like you come in and...
Airlines need lessors. 15 years ago, one in 8 planes was leased. Today it's every second plane. Planes are very expensive. Airlines typically haven't always been run as profitably as, and most people will know that airlines are tough businesses to run. Very low profitability. They have much less established balance sheets than lessors do. All we have is planes on one side and debt on the other. Very simple balance sheet. So typically our cost of funds is very low, and we're effectively a financing function. You're asking the same question as to why do people borrow from banks to buy a house? It's because that's the way it's done. That's what makes it. It's easier for the people to do it that way. Why aren't people offering loans to individuals to buy their houses? Because there's a set system, which because it's a big purchase, and that's how the financing function works. So we provide the number of planes grows every year because there's passenger traffic, as I show you on one of those slides, is growing at 6% a year and has grown at 6% a year for 50 years. So it's an extraordinary growth story because people just want to travel.
Question at the back, please.
Yeah.
You sell these 22 planes, surely the profit is going to go down. How long is it going to take to replace these planes?
Yeah, to answer that, it's a great question actually, because will we be able to redeploy that capital? And our intention is absolutely to redeploy capital. Our intention is not to sell all 22 planes. It'd more likely be something less than that. We do have a number of bidders. Bidders are interested in portions of the portfolio as well. As I said, our preference is to own aircraft for the long term, so our preference is not to sell all those planes. But if you look at the annual report, you'll note that at 30 June, those aircraft had a book value of about $400 million. In calendar year last year, 16, we added $400 million worth of aircraft. So we have demonstrated already that we can redeploy capital extremely quickly. And if we sell any lower proportion of those planes than the whole 22, obviously it becomes a lot less of a problem. And there are lots of planes out there that we're currently looking at in terms of replacement and growing the company. I mean, our desire would be to be a bigger company than we are today within 6, and certainly within 12 months of the date of any sale. Because we'd be lining up things to buy and to deliver, the moment any transaction was culminated.
Question at the front here, please.
I'm interested to know, in one respect, the relationship between yourself and the airlines that you work with.
Yep.
I mean, if your company is prospering, does it have any impact on the airlines in any way at all?
No. The way that the business has evolved is that airline leasing has only been around for about 40 years, and all the lessors typically used to work for Boeing or Airbus. So it's very much a relationship-driven business, but it's a business driven out of need for financing as well. The airline, in terms of the way they run, and have changed their business models in that as they're running at higher capacities now and higher load factors, it actually fits into the leasing model even better than it used to. 20 years ago, they had a need for financing because they were all losing business. They were all losing money. Airlines were going out of business. Today, it's more a function of because they're able to run their businesses more efficiently, it suits a leaser. If they know that they can get 80% bums on seats, they know that they should get access to a plane because that plane will be profitable for them. And so the fact that they're running their businesses more efficiently has actually made it suit the leasing model better, because if they know that they can run their business with high load factors, then they just keep getting planes as they know that they can complete those routes.
That is not guaranteed, is it?
Well, obviously it's not guaranteed, because people choose to travel, but they can change the size of the planes. They can change all of these sorts of variables. That's why airlines have large fleets, and that's why older planes have plenty of residual value, because it's easy to lease a 10-year-old plane because you lease it at a much lower rate. So they can, if you're going to half fill a plane, you half fill an old one. It's cheaper to lease than a brand new one, which you try to fly as full as you can on your most busiest routes. So there is a natural fit for lessors and airlines.
Would you care, if you can, make a comment about Flybe in particular? I'm just interested.
No, well, Flybe is a customer of ours. We have 5 planes with them. We delivered them over the course of the last sort of 18 months. They choose they choose one of the most fuel efficient aircraft in the world to have delivered by us. The great thing about the ATR 72s that we delivered to Flybe are that they are one of the easiest planes to run profitably on the planet, which is why they have such a strong preference. And they've been making these planes for 25 years, and all the airlines typically prefer them because they outsell their competition 7 to 1. That's because they use the lowest fuel per seat per hour of virtually any commercial passenger aircraft. And so, from a Flybe perspective, we think it was a very smart decision for them to choose that aircraft to fly on those routes.
Richard, I think we're out of time there. Thank you very much indeed. Thank you.
Thank you.